about to see a crisis of unprecedented proportions in commercial real estate? Well, that's what our next guest says. Randall Zisler founded the real estate research group at Goldman Sachs, and he's been an economics professor at Princeton as well. We're pleased to have Dr. Zisler joining us now. Welcome to you.
Pleasure to be here.
And you were listening also with us to Elizabeth Warren, who's overseeing TARP, and you had some interesting comments. You said there's a lesson specifically to be learned about what's going on with regulation for commercial real estate. What is that?
Well, real estate isn't really isolated from the rest of the economy, domestically or globally. And I think one of the problems that she has correctly identified is that there needs to be more transparency. Many of the investment vehicles, particularly in real estate, certainly through hedge funds and private equity funds, have been opaque and highly leveraged. And when the returns are brought back, they usually are not adjusted for risk. And that's going to have to change, not only for high net worth individuals, but for some of the supposedly more sophisticated investors like public pension funds and insurance companies.
And on your quote earlier today, Bloomberg News, a crisis of unprecedented proportions is approaching in the U.S. commercial real estate market. Okay, so we've been actually hearing this for months, as I'm sure you know. So when is this shoe going to finally drop?
Well, the bottom is going to hit in 2010. But we're not going to be able to claw our way back until about 2013 or 2014. But of course, the story varies depending on what property type and what market you're in. But the key thing here is that there is over $1.5 trillion worth of commercial debt that needs to get refunded over the next 3 years. 40% of the lending capacity of the United States has been decimated. And the nation has to decide whether it's going to recognize the losses or whether it's going to allow banks to extend and pretend. And if you extend and pretend and delay the point where you revalue these assets, transactions volume is going to remain low. Price discovery is going to be impaired. And as long as price discovery in a decentralized market like ours doesn't work, we're not going to be able to get back on a long-term growth path as soon as we really should, and that will extend the damage.
Let me work through these one point at a time, starting with property prices. Already down 30 to 50% off the peak, so how much further could they drop, percentages?
I think, again, depending on the market, another 15–20%.
All right, and then as far as, is there any equity value left at all of major commercial properties?
Any deal, and I'm going to generalize, on average, deals that were done since 2005, if they had more than 70% leverage on them, then they're underwater. And then the issue is whether or not, if the debt is coming due, whether the bank forecloses, whether they extend, restructure the debt. And that's the big unknown. And part of that is regulatory risk, part of that is political risk. So we really don't know where that's going to go. Geithner and the administration are really walking a very delicate line. They don't have any clean choices, and that's the big risk today. And for those people, for example, the bottom line is for people who are going into the market now, trying to buy real estate at below replacement cost, the big unknown is when real estate prices get back to replacement cost. And so, therefore, people who are very sensitive, using very high-cost money, and are very sensitive about getting their investment back in 2 or 3 years, they may be surprised if some of these markets in which they're investing in today recover at a slower pace. So the market is treacherous.
And then from the banking side, this has really got to kill the lending banks to this industry.
Well, it's serious. If the banks had to mark to market many of these assets, I would say a significant percentage would be insolvent. And that is something which the government doesn't want to have to deal with. But eventually, we always pay the piper. And it's a question of how you want to recognize the losses. You can recognize it in terms of workers unemployed, underutilized resources, or you can bite the bullet. Somebody has to pay the check, and the economy goes on. And so the problem right now is how fast we're going to recognize the losses. The economic cost has already been incurred. And the only question is whether we endure additional costs because we have people unemployed, vacancies in buildings, et cetera. But these are some very big policy issues.
Commercial real estate, we will see what happens. Thanks for the status update, Randall Zisler.